The Intelligent Investor was not actually authored by Benjamin Graham. It was written 3 millennia before his time by a monarch whose yearly gold income alone surpassed the gross domestic product of most contemporary nations. What you are about to experience will fundamentally transform how you interpret both a corporate balance sheet and a scriptural verse. There is a concealed code operating beneath the surface of financial history, and today, that code is being revealed. Stay until the conclusion because a prayer is waiting for you, one spoken specifically over your financial destiny. Now listen with focus because this is where the veil starts to lift. History has a method of hiding its most vital connections in plain sight. A Jewish king in Jerusalem recorded the laws of capital accumulation by the glow of oil lamps, surrounded by the most significant treasury ever gathered on earth. Centuries pass. Empires ascend and fall. Languages evolve. Then a Jewish economist in New York, after enduring the most disastrous financial collapse of the modern age, writes down the laws of capital accumulation on paper. What he records matches the king almost word for word in principle, concept, and warning. He never studied the king as a financial authority, yet he arrived at the same place. 3,000 years of distance, yet the same destination. That is not a coincidence. It is a signal embedded within history by something far greater than either man. The sleepers never notice it. They view the Bible as spiritual poetry and the stock market as secular machinery. They keep these two realms locked in separate rooms because no one ever informed them that the door between those rooms was never truly closed. But here, the code is decoded. Here, the hidden becomes visible. Here, the ancient speaks directly into your current financial reality. What if the greatest investment book of the 20th century was already tucked away inside the greatest wisdom book of antiquity? What if Benjamin Graham was not an innovator, but a rediscoverer? What if Wall Street accidentally rediscovered Jerusalem? What if the principles your financial advisor charges you to learn were already freely available to anyone willing to open a very old book? That is the question this discussion answers. And once you see it, you cannot unsee it. The pattern does not vanish, it deepens. Benjamin Graham did not develop his principles in a library, he developed them inside a catastrophe. Imagine 1929. The New York Stock Exchange is not a cautious, calculated institution. It is a carnival. Shoeshine boys are offering stock tips on street corners. Secretaries are mortgaging their homes to buy shares in companies they cannot name. Bank clerks are borrowing against their salaries to enter a market that has never, in their experience, declined. Everyone is intoxicated by price. Almost no one is asking about value. The distinction between what something costs and what something is worth has been entirely dissolved by collective euphoria. Then, in the span of a few October weeks, the entire illusion shattered. Fortunes that took decades to build vanished in hours. Men who were wealthy on a Thursday were bankrupt by the following Monday. The carnival ended, the lights went out, and what remained was wreckage, silence, and a few people trying to understand what happened and why. Graham survived it, barely. He lost most of what he had built. What emerged from that wreckage was not just a theory, it was a scar that became a system. He published Security Analysis in 1934 and The Intelligent Investor in 1949. These books did not teach people how to get rich quickly. They taught people how to not be destroyed. That is a completely different lesson. Most people never grasp the difference between those two things until they are standing in the rubble of their own financial ruin, asking the wrong questions. Here is what almost no one knows about Graham. He was not building something new. He was excavating something ancient. 3,000 years earlier, in a palace in Jerusalem, King Solomon had already observed the emotional behavior of traders and merchants and written the diagnosis. Not in financial terms, but in wisdom language. Yet the diagnosis was identical. Proverbs chapter 27, verse 1. Do not boast about tomorrow, for you do not know what a day may bring. Read that again slowly. Solomon was not writing about humility as a passive spiritual virtue. He was writing about the lethal danger of pricing future certainty into present financial decisions. That is the exact mechanism, described with surgical precision, that triggered the 1929 crash. Investors had priced in a future that would never arrive. They boasted about tomorrow, and tomorrow destroyed them without mercy. Graham named this problem Mr. Market, a fictional business partner who shows up at your door every day offering to buy your shares or sell you his, driven entirely by mood, not mathematics. Some days Mr. Market is euphoric and offers prices that have no relationship to reality. Some days he is terrified and gives real value away for almost nothing. Graham's instruction was as precise as a scalpel. Do not let Mr. Market instruct you. Do not catch his fear. Do not chase his excitement. Let him serve you when his moods create opportunity. Ignore him when they do not. Solomon said it 3 millennia earlier. The man who prices tomorrow is a fool. The man who positions himself for tomorrow's uncertainty, who builds reserves against disasters he cannot predict, who refuses to be swept into collective madness, is wise. That man does not merely survive the collapse, he is positioned to acquire during it. Feel the full weight of that. The greatest secular investor of the 20th century and the wisest king in history looked at the identical human failure, the compulsion to predict, to assume certainty, to boast about tomorrow, to let emotion override judgment, and wrote the same prescription with different ink. Where are you watching from right now? Drop your city or country in the comments below. This community is gathering from every corner of the world, and I want to see your name there. Here is something most people miss entirely when they read the book of Proverbs. Solomon was not writing theory from a comfortable academic distance. He was writing from deep operational experience at the center of the most complex economic organism of his era. This man commanded a treasury that received 666 talents of gold per year as a single line item of annual revenue. Not his total wealth, but 1 year's income. He controlled trade routes connecting Egypt, Arabia, Phoenicia, and the Eastern spice networks, managing the movement of goods, labor, contracts, and currency across an empire stretching from the Euphrates to the border of Egypt. He did not observe wealth from a scholarly distance. He engineered it at a scale that no other individual in recorded history has matched. So when Solomon wrote Proverbs chapter 21, verse 20, "Precious treasure and oil are in a wise man's dwelling, but a foolish man devours it," he was not composing motivational language for a wall scroll. He was writing a principle he had watched operating in real time across thousands of transactions and decisions made under pressure or with patience. He had seen what happened to men who spent everything they accumulated. He had also seen what happened to men who reserved, who protected, and who maintained a layer of surplus between their current position and the point of collapse. That principle is what Benjamin Graham later formalized in the 20th century as the margin of safety. The wise man in Solomon's proverb does not spend what he accumulates, he reserves it. He does not operate his household or business at the absolute edge of its resources and then hope that tomorrow is generous. He builds a buffer, a deliberate, calculated layer of protection between where he stands and the point at which one unexpected event becomes total catastrophe. Graham said the same thing in chapter 20 of The Intelligent Investor, describing the margin of safety not as one useful concept among many, but as the central concept of all sound investment. Not secondary, central. Stop and apply that to your own life right now. Do you have a margin, not in theory, but in actual practice? Or are you living precisely at the boundary of your income, where one medical bill or one lost contract becomes a crisis that dismantles everything? Now look at how Solomon built alongside his treasury reserves. He positioned himself geographically before value arrived. He established trading relationships with Hiram of Tyre, securing access to the cedars of Lebanon and Mediterranean shipping infrastructure before those routes became crowded and expensive. He negotiated access to the Red Sea ports at Etzion Geber before competing powers fully recognized their strategic importance. He did not buy into crowded, obvious, already celebrated opportunities where the price had already absorbed all available intelligence. He moved early and quietly into undervalued positions before the crowd arrived to inflate the cost beyond its worth. Graham called this value investing. Find what is worth more than what it currently costs, buy it there, hold it with patience, and never chase what is already priced for a perfect future. Then there is the architecture of risk. Ecclesiastes chapter 11, verse 2. Give a portion to 7 or even to 8, for you do not know what disaster may come upon the land. This is not decorative spiritual language. It is a direct operational instruction on the structure of diversification, written by a man who had actually built and managed a multi-sector economic empire. Solomon knew with certainty that no single position, no single trade route, or no single bet was guaranteed against catastrophe. Spread, protect, and distribute your exposure. Do not concentrate your entire inheritance into one conviction, no matter how deeply you believe in it. Graham echoed this in his strict requirements for the defensive investor. A minimum of 10 holdings spread across sectors, weighted conservatively toward financial stability and earnings consistency, with experienced practitioners often extending that range to 30 or more positions. Two completely independent systems, 3,000 years of separation, one architecture. If this wisdom is resonating in you right now, go ahead and give this video a like. That action tells the algorithm that this message deserves to travel further and reach people who need it. Here is the deception hiding at the center of modern markets, in plain sight. So familiar that almost no one questions it anymore. Price and value are not the same thing. Most people treat them as interchangeable synonyms. They see a high price and assume it represents genuine worth. They see a low price and assume it represents a problem. But price is simply what the crowd agreed to pay at a specific emotional moment. Value is what a thing is actually worth when you strip away mood, momentum, fear, and the noise of collective opinion. Solomon captured this dynamic in Proverbs chapter 20, verse 14. It is bad, says the buyer. But when he goes away, then he boasts. Read that with full attention. The buyer publicly degrades what he privately knows is valuable. He performs disinterest and communicates skepticism to suppress the price, while internally he has already done the calculation and knows exactly what he is looking at. Then he walks away satisfied, having acquired something of genuine worth for considerably less than its actual value. Solomon was not condemning this buyer as dishonest. He was describing a timeless negotiation dynamic operating in every market. Inside that description, he planted an instruction. Learn to distinguish between what the crowd says something is worth and what it actually is. Graham built his entire career on that gap. He called it intrinsic value, the true underlying worth of a business calculated through its actual earnings, tangible assets, and long-term capacity to generate cash, as completely distinct from its current market price. The formula was elegant in concept and demanding in execution. Locate businesses consistently trading below their intrinsic value, purchase them with a sufficient margin of safety, and hold them with the patience of a man who understands precisely what he owns and why. But here is where most people stumble. They understand the framework intellectually and then abandon it under emotional pressure because waiting is genuinely painful. Markets decline, people you respect begin to panic, and financial news headlines describe catastrophe in language designed to produce anxiety. Friends question your judgment, and the system demands that you hold your position, or worse, that you purchase more, while everyone around you is selling in fear. Do you have that quality of discipline? Be fully honest with yourself. This is where Graham's system reveals its secular ceiling, the hard boundary of what technical genius alone can accomplish. Graham was extraordinary, and his analytical framework stands as one of the most rigorous systems ever constructed. But it was built entirely on human capacity alone, on an individual's ability to suppress emotion and trust cold mathematics in the middle of a financial storm. Graham himself admitted that the investor's chief problem and worst enemy is very likely himself. He identified the central weakness of his own system with clarity. What he could not provide was the means to eliminate that weakness, because the weakness is structural to human nature without spiritual grounding. His system tells you precisely what to do, but it cannot give you the internal strength to actually do it when the world around you is collapsing. Graham diagnosed the disease of emotional speculation with extraordinary precision, managing it through rules and ratios that require a depth of sustained discipline that most human beings simply do not possess. That is not a criticism of Graham. It is a recognition of his profound honesty. He knew his system was a technical map of extraordinary detail, but he never claimed it was a soul. And the deepest problem of wealth is not ultimately a technical problem. It is a condition of the soul wearing financial clothing. Solomon understood that from the beginning. Graham discovered it through loss, reconstruction, and the long, quiet work of building something that could survive the storms he had already lived through. Where Graham's map ends, Solomon's opens into territory that no financial model has ever been built to enter. Because Solomon understood that financial behavior flows downstream from spiritual condition. It is not that prayer replaces careful analysis. It is that the disordered state of a soul, its anxiety, greed, impatience, and pride, will corrupt even the most technically perfect strategy over time. You can memorize every rule and apply every ratio correctly and still destroy yourself because the rules are running on hardware that has not been repaired at the level where the actual damage lives. Solomon identified 3 specific layers of alignment that no secular system has ever been designed to provide. The first is the alignment of intention. Proverbs chapter 16, verse 3. Commit your works to the Lord, and your plans will be established. This is not passive resignation. The Hebrew word for commit carries the image of rolling a heavy burden off your own shoulders and onto another's. Solomon was not instructing anyone to stop planning. He was targeting the anxiety that lives underneath the planning, the silent, grinding conviction that if you work hard enough, you can guarantee outcomes that were never yours to guarantee. Release that weight. Align the intention before you execute the strategy. What changes is not the plan, but the quality of clarity with which you execute it. The second layer is generosity as a mechanism, not an afterthought. Proverbs chapter 11, verse 24. One person gives freely, yet gains even more. Another withholds unduly, but comes to poverty. This verse appears in almost no secular financial literature because it makes no intuitive sense to a closed system of economic thinking. But Solomon placed it at the architectural center of his economic theology, because generosity is not the reward that comes after wealth is accumulated. It is a structural component of the process itself. It breaks the spiritual circuit of hoarding, which eventually poisons judgment and corrupts the relationships that create opportunity. A closed fist accumulates nothing new. An open hand remains positioned to receive. The third layer is foundation, where Solomon draws a horizon that Graham never mapped. Ecclesiastes chapter 3, verse 14. I perceive that whatever God does endures forever. Solomon was writing about the standard of permanence. Wealth that genuinely lasts across generations is not only financially structured with intelligence, it is spiritually anchored to purposes that extend beyond the lifetime of the person who builds it. Now consider this carefully. Graham taught these principles in the stripped language of secular finance. His most celebrated student absorbed them with extraordinary discipline, and then, without a theological framework, began operating from a deeper layer than Graham had ever drawn. He built not just for annual return, but for multi-generational legacy. He compounded not just capital, but the quality of his own judgment over decades. He held not just portfolios, but principles through market collapses and cultural pressures. He followed Graham's technical instructions with absolute fidelity and arrived at a destination that those instructions alone cannot fully explain. That convergence is not a biographical accident. It is the invisible gravitational pull of wisdom operating across centuries, drawing every honest seeker toward the same center: genuine value, patient accumulation, absolute integrity, and the long horizon. That is the Solomon Wealth Code, not a shortcut or a formula, but a coordinate system for building what does not fall. Benjamin Graham spent his entire professional life teaching one foundational truth: do not speculate, invest. Know precisely what you own and what it is genuinely worth. Buy it below that worth. Construct a margin of protection. Diversify deliberately against disasters you cannot predict. Hold with absolute discipline when the market panics. Refuse to allow Mr. Market's daily emotional fluctuations to determine your behavior. Build the system, trust the system, and let time do what impatience destroys. Jesus said it in language that cuts even deeper in Matthew chapter 7, verses 24 through 25, describing a man who hears wisdom and acts on it as one who builds his house upon rock. The rain came, the floods rose, and the winds beat against that house, but it did not fall because its foundation was rock. The man who hears and does not act builds on sand, And when the same storms arrive, and they always arrive, that house collapses completely. The Solomon Graham portfolio is not ultimately a list of stocks. It is a posture toward capital and toward life. It is the discipline of buying genuine value before the crowd recognizes it. It is the wisdom of reserving a margin of safety before the crisis arrives. It is the structural intelligence of distributing across 7 or 8 positions because you do not know what disaster may come. It is the spiritual practice of committing your works to God to release the anxiety that corrupts judgment. It is the counterintuitive discipline of giving generously as a mechanism of the system. It is the act of building toward a horizon that extends well beyond your own lifetime. It is the rock, not the sand. It is the house that stands when the storm arrives because the foundation was chosen before the storm was visible. You do not need to choose between Solomon and Graham. They were already saying the same essential thing. One drew the complete map in gold ink inside the oldest wisdom literature. One drew a working map in financial notation after surviving the catastrophe that proved the original map was accurate. The destination was always identical, unshakable, principled, generational prosperity that outlasts market cycles and serves purposes larger than the person who built it. If this message has opened something real in you today, subscribe to this channel now. This community is being built specifically for people who refuse to separate wisdom from wealth, strategy from spirit, and the ancient code from the applicable principle. Now, before we close your eyes if you can, or align your thoughts fully with mine right now. Father, we come before you as stewards, not as owners. We acknowledge that every resource we hold has passed through our hands from your provision and belongs ultimately to your purposes. Give us wisdom that exceeds what our education alone could produce. Give us discernment that surpasses what our analysis alone could generate. Give us patience that outlasts every market cycle, every season of pressure, and every voice that tells us the principles no longer apply. Teach us to build margins of safety not only in our portfolios, but in our character, in our relationships, and in the foundations of our homes and families. Teach us to give generously as a structural act of faith, not as an afterthought when comfort has already arrived. Teach us to plan with courage, to hold with discipline, and to release outcomes with genuine trust in your sovereignty over what we cannot control. Let the wealth you entrust to us serve purposes that extend far beyond our own comfort and lifetime. Let it reach generations we will never see face to face. Let every structure we build rest on the rock that does not move when the storms arrive, because the storms will arrive. Protect what is being built, multiply what is committed faithfully to you, and give wisdom generously and without finding fault to all who ask it of you. Amen. May the blessing of the Lord make you rich, and he adds no sorrow with it. Proverbs chapter 10, verse 22. Go and steward well. If this exploration of the ancient wealth code has changed how you view the intersection of faith and finance, please subscribe to our channel and like this video. We are uncovering the timeless principles that history has often tried to obscure. Let us cultivate a future built on solid ground. The next treasury of wisdom will be opened soon.